in this webinar is for educational purposes only. And you will be getting a recording of this webinar. So if you want to go back and read the whole thing, more power to you. Okay, so my name is David Kushner. I've been trading the markets for over 25 plus years. I trade stocks, I trade options, I trade futures, and some Forex, not too much Forex anymore. My background was I had an automotive parts business that I started when I was 18 years old. I had that business for 28 years before I sold it in 2005. And since then, I've been a full-time trader. So like most of you, you probably have a whole shelf full of indicators, trading systems that came with a lot of extra empty promises of helping you become a more profitable and more consistent trader. So I know that I have probably 3 or 4 hard drives full of stuff that I no longer use, that I spent a small fortune on. But you know, that's all part of your trading experience and learning process. So when I saw a webinar that Mark Sachs did, and I saw the money flow tracker system, I quickly realized that this methodology isn't based around the same old indicators that everybody else teaches, but more based on mathematical modeling and triple and quadruple screen analysis. I now only trade, we only trade with institutional order flow. Okay, so when I talk about money flow or order flow, I'm only talking about institutional order flow. Why? Because institutions are the ones that really move the market. Okay, the institutions call the retail traders the guppies. So we only trade when the institutions are trading. And it's made me much more profitable and much more consistent trader. I'm now running over 70% win-loss rate. So the agenda for this webinar is how the money flow tracker software works, the high probability setups, the unbreakable rules to follow, how I trade breakouts and sidestep losing trades, the money flow tracker auto trader, and how to pass the evaluation to become a funded trader. So those who stay to the end of this webinar, which I usually try to keep it within 45 minutes to an hour, we have a huge discount and some additional software as a quick action bonus. So why are you here? You're not getting the results you want yet? Well, look, you're not here to waste time, and neither am I. You're not here to waste money, and neither am I. And you're sick of buyer's remorse. So what does that mean? That means you buy a system, you trade with it for a while, you do spend all the time and energy learning it inside and out, and it's just not working for you. It's just not a good fit for you. Okay. So you want people to say, well, then show me a solution that you want to hit constant winning trades. You want a solid trade performance that repeats daily. Look, the markets are here for us to extract money from it every day. Right? Some days we can't extract money from it. It's just too choppy. Some days we extract a lot of money from it. You just have to follow the system and pick and choose the setups and follow the rules. All right. So you need 4 things to create trading success. The first thing you need is software. Software to provide you with a competitive edge over all other traders. The second thing is you need that edge to track the direction of money flow, institutional money flow. The third is etched in stone rules to follow, and this will eliminate discretion. And the fourth thing, which I believe is the most important out of all of them, is patience. Patience, discipline, you've heard it. I'm sure you've heard this 1,000 times, okay? Patience and discipline, patience. But you know what? People like to push the button, you know, and they think they see a trade moving and they want to hop on board and they want to be in it. And what happens? As soon as they hop on board, it goes the other way and stops them out. So you need patience, right? So I'm going to break down the money flow tracker software for you in detail. And if you have any questions at all, just put them in the questions box and either myself or Rory will answer them, but we will answer every single question. All right, so let me show you some trades we've taken. Here was a trade on AMC, an options trade for 139%. Here was another one on GME for 188%. This one here was on 30-year bonds at 41 ticks at 31.25 a tick. It's $1,281. Here's another trade on the euro. You know, I can show you trade after trade after trade, but you know what? That's not going to help you. And I'm here to help you. So obviously from the polls that I took and from you guys being here and gals, you have a problem making money. Why? Because you don't have the proper tools to efficiently manage your trades. You overtrade, you revenge trade, you make impulsive decisions. Does that sound like anybody? I could raise my hand because I've done it. I've done it more times than I ever want to admit to it, but I don't do it anymore. That's the difference. You lack consistency. You trade with indicators that lag price. You lack a mathematical proven trade methodology, and all these things lead to blowing up trading accounts. So my commitment to you is to bring this to an end right now, here, tonight. All right. So why do 95 to 98% of traders that use the following go broke? Price action, MACD, Elliott wave, divergence, scan, Fibonacci, price. You know, if this stuff really worked, everybody would be a multi-billionaire, right? You know, people, Elliott wave guys, they swear on Elliott waves. MACD traders, you're trading an indicator that lags price. So I don't really, but you know, none of these have any future predictive properties. Now, I am not, and I'm going to repeat this, I'm not saying that the money flow tracker can predict the future, because, you know, the only one that can predict the future is that crazy professor in the movie Back to the Future. You know, I'm not saying that because it's impossible. Nobody can predict the future. No indicator, nothing can predict the future. So, Mark Sachs had over 35 plus years in the study of the field of applied mathematics. He was a professor at Jefferson University for 8 years. I mean, at university, and after 8 years, he engineered the software system and trade methodology that can improve your trade performance, and it's called the Money Flow Tracker. I've been trading with the Money Flow Tracker software for the last 4.5 years, and it's been the best 4.5 years of my trading career. We have over 500 traders between our 3 trade rooms that we trade together and have great success. Before we get started, I want to share with you my trade journal, because I want to be transparent and I have nothing to hide. This is my personal trade journal. I use it as online trade journal. Every day I do a Every day I do a performance report in NinjaTrader. I go to the trades tab, I download all my trades into an Excel worksheet, and I click on this button, and I don't think I did today's yet. Today is, oh yeah, I did today's. No, today's not, I didn't do today's. That's not it. No, I didn't do today's. Look, 6th, 7th, 8th, I didn't do today's. I forgot to do it. Anyways, and it gives me my equity curve. So here's my equity curve for the year. You know, we're up about 68,000 for the year. It's not a lot. We had a better year last year, but the markets have been very choppy. For months, they've been very choppy. But if you look here, my win rate, 76.19. My profit factor, 2.59. So for those who don't know what that is for every dollar I risk, I am making $2.59. All righty. I use this program. I love it. It tells me here's my monthly reports. So let's say for September, tells me what I did every single week. August we did was slow. July we did okay. June was really good. May was slow. This year was really slow compared to last year. I'm going to show you last year really quick, just to show you that this is what we did last year. Okay, last year in September was slow, but then October we did 11,000. November we did 12, almost 13,000, and then Christmas month was slow. But look, we've had great months. 5,000, 11,000, 6,200, 9,800, 19,000 in June, you know. And last year, my stats were pretty much, my risk reward was, profit factor was higher, but my win rate was the same. All right. So I wanted to share that so that you guys could see that I really do trade, and I trade the system every day. Look, the markets may consist of many small retail traders represented by these colored marbles, plus one or more large institutional trader represented by a big purple ball. Well, since you know that most retail traders lose money, why would you want to trade along with them? I don't. I want to trade with the institutional trader. You know, when people ask me what I do for a living, I said, I'm an institutional trader. And they look at me like, what is that? I said, I trade with institutions. Well, what institution do you trade with? I said, my own institution. So anyway, let's keep moving on. So the money flow tracker software has 3 key metrics, right? First one, triple screen assessment of order flow. Second one, triple screen assessment of correlative markets, and triple screen assessment of the LIQUIDITY for momentum. So what do we mean by triple screen assessment? Well, I have coached thousands of traders, and I find the way people learn the best is by the keep it simple, stupid method. I like to use simple terminology. So the way I look at triple screen analysis is we have 3 time frames in a line, either to the upside or the downside. 3 time frames in agreement, right? So triple screen assessment of order flow, that's the first powerful force that moves price. So when I say order flow, most people think of these candles. And when I first started trading order flow, I did too. And just looking at these candles with all these numbers on the right, on the left, outside, on the bottom, on the right, the left, on the right side, on the top, you know, my brain hurts from just looking. And it's totally impossible for you to make good trading decisions and try to figure out what's going on here when the markets are moving. So we came up with our own order flow candles, and we made it super simple. You know, the KISS method. So when you have a green outline candle, we know that the delta of this candle is positive. So, and when you have a red outline candle, the delta of the candle is negative. So to keep it simple again, when I'm trading and I'm going long, I only go long on green outline candles. I want to go long with the buyers. And if I have red outline candles and I have a sell signal, I only want to go short with the sellers. And just keep it simple, very simple. So what do I mean by triple screen analysis? It means that we have 3 time frames going in the same direction. So I put a screenshot of our charts up here because I wanted you to see how simple and easy and clean they are to determine. All our indicators, the quants, the long term and the short term, we use these colored lines. The multiple time frame LIQUIDITY, we use the colored lines. The modified LIQUIDITY, we use the colored lines. Why? Because it's less emotional for people. And when we have everything lined up all green and we have a setup, we have high confidence and high probability that this trade is going to go through. So the second powerful force that moves price is triple screen my tongue's getting in the way. Triple screen assessment of the LIQUIDITY for momentum and using our hybrid candles, the wicks inside the candles. So again, triple screen assessment of the modified LIQUIDITY means they're going up on 3 time frames. And the wicks. So let me explain to you what the wicks are. Let me get my pen here. And let's choose a color that you can see. All right. So you see this candle's wick opened from the previous candle's close, went up the bar size and closed, and then the next one, and the next one. These are acceleration candles. Now you see this one here that pulled all the way back. This is a retracement candle. We call it the pullback candle. And we use this candle. We use this candle to our advantage in the market. So let me clear that up, erase all that, and let's keep on trucking. But you haven't heard that one in a long term. Okay, so the modified Laguerre. We developed the modified Laguerre, and we took all these indicators and we added our own algorithm to them, and we developed the modified Laguerre. Now, the modified Laguerre does not show divergence like other oscillators, but it shows strength of trend. So the modified Laguerre is represented by the bottom colored line. So when it crosses below 20, it will be red. When it crosses above 20, it's sloping up, it will be lime green. When it crosses over 80, it turns dark green, and when it crosses below and is sloping down, it will be orange. Now, we want to see it pinned at 0 or 100, so we get the acceleration dots. All right, so when it's pinned up there, that's the most acceleration in that direction that we're going to get. So now let's talk about the next part of it, the quant lines that are using our AI engine. And that's the third most powerful force that moves price. And what our quant lines are doing, we have a short term and a long term, is they're examining 28 market components, and then we plug all that data into our AI system for correlation. Now, I know that probably everybody in this webinar, we probably have 102 people in this webinar. You all probably know what correlation is. The word itself tells you what it is, right? So for instance, if ES is going up, would your trade get a little boost if you're in, let's say, ES, and NQ, RTY, and YM are going up all at the same time? That would be a very big boost. You have 4 markets going the same direction. People are buying the market, right? Now let's look at the other side of it. Let's say ES is going down, and NQ is going up, and RTY is going up, and YM is going up. But for some reason, ES is going down, right? I want to, never mind. Let's use YM as an example. Today, NQ was going down, YM was going up. You know, I wasn't getting signals because of that. So you want to see all the markets going in the same direction. It's like the old saying, a rising tide floats all boats. Well, it kind of works the same way in the market too. So the next thing that we did was, I felt that 3 timeframes in agreement was not really good enough, especially if you're in choppy markets. So we added another time frame, and we added the indicator that we call the C2 indicator. Now the C2 indicator just adds a fourth time frame. You have your trading chart, your screen 1, your screen 2, your time frame, and then your higher time frame. So the C2 indicator is displayed on the candles in this stair-stepping line on top of the candles. So when we have a colored background, which means we have 3 time frames in agreement, and we have the C2 indicator, we know we have 4 time frames in agreement, and then everything here is lined up below us, we usually have a very high probability of a winning trade. I'll never tell anybody that you're never going to have a losing trade. Okay? If anybody ever tries to tell you that you are going to have a 99.9% winning trades, don't walk, run the other way, because it's virtually impossible. There's nobody that trades and makes 100, never has a losing trade. And if they tell you they do, they're full of crap. So putting it all together is easier than you think. So the money flow tracker, here are the rules and here are the setups. First thing you want is a colored background, either green or dark pink. Why? So you have 3 time frames in agreement. The next thing you want is the C2 indicator that brings in the 4th time frame in agreement. The next thing you want is, we have 2 lines here. We have the solid line and the dot dash line. Going up, we want to see the solid line above the dot dash line. Going down, we want to see it opposite. Now, this is where it gets a little tricky. If you are hitting resistance, like a pivot, the VWAP, higher time frame support or resistance, whatever it happens to be, you must wait for 3/4 of a body of the candle to break that pivot, and then you have to wait for a pullback candle to get in. And I'll explain why a little bit further in the webinar. Both quants must be in agreement, either red or green. The multiple time frame Laguerre must be in agreement with the quants. And the modified Laguerre must be in agreement. So they must all be either red or green. And the modified Laguerre must be pinned at 100 or 0, so you get your acceleration dots. There's the trade, this trade here. This was the result of this trade. Now, our exit is either you're trailing your stop and you get stopped out, or you exit when the dot dash line changes color, either from green to red or green to yellow or red to yellow or red to green. Now, we call it exit on line change, and we have that in our entry strategy, and I'll explain to you that a little bit further on. So let me just grab a little drink here. So the trading with money flow tracker rules. The reason that I love this software so much, and I've been trading with it so long, and I've been doing so well with it, is because it keeps you out of choppy, non-trending markets. And those are the markets where most traders lose money. So remember, it's okay not to trade every day. Today I did a trade. My first trade of the day. Here it is. Here's today's date, 11/9. This trade was 66 ticks. I take my first profit target is 20. My stop goes to break even. And then I trail it. I don't wait until the line changes. But I just trail it. And I got stopped out on my second contract at 66 ticks. My last contract at 66 ticks. So I made my money for the day on this one trade, and I traded sim the rest of the day. So people say, well, why do you do that? I said, because I know when I've won for the day, the longer that I sit here and try to trade, sure, I could make a lot more money, maybe, but I could lose all my winnings, all my profits for the day. So I learned this from a very old time trader. And he told me, he said, David, I'm going to tell you this, and you can listen to me or you could go broke. I said, what? He says, when you've made your money for the day, stop trading. Go do something else. It's like being in a casino. Why do you think casinos don't have clocks? Why do you think casinos don't have windows? Why do you think casinos are all the way in the middle of the hotel where you can't see the front door to see if it's daylight or nighttime? They don't want you to. Why do you think they give you free drinks and free rooms? They don't want you to leave. Why? Because they have that 5% edge over you, and they want you to sit there and gamble and gamble and gamble, and their chances that you're going to end up losing. All right? It's a little bit of advice from me. So here's a trade that I took. This was on crude oil. I used to trade crude oil a lot. And I got to tell you, the last year or so, crude oil has been like the snail. I mean, it's just not doing hardly anything. But anyways, we got this trade on crude oil, right? It broke this pivot, 3/4 of the body of the candle. I have to wait for pullback candle. So I waited, got this pullback candle. And as this candle was pulling back, I placed my order, sell on down close. I got entered at 80.49. My first target, 10 ticks, $100. My second target, my exit was at 80.04. So I made 55 ticks on my runner. That's $550 plus 100. This trade made me $650, and I was trading 6 accounts that day. Do the math. You know, that was like one of my best days at trading. Okay. Now, and I let it exit on line change. I said, I'm just going to let this thing go. Look how long this trade took. 9:30, let's say 9:36 to 9:37, 1 minute, $650 in 1 minute. I was patient, very patient. And you have to be patient when you trade. If you're not patient, you have to learn patience. So the money flow tracker software gives you clear and exact entries, clear and exact exits, and all targets are pre-configured. We give you all the ATMs. Now, I'm going to teach you how I trade breakouts with the money flow tracker software, and we sidestep a lot of losing trades with this strategy. I call it the pull back and go. So let me grab my pen again here. Okay. So let's say you don't see what's going on here, right? That this came down. So the market's coming down, right? And bam, we run into a pivot. The shaded area is higher time frame support. So it breaks by 3/4 of a candle here. Then we get the pullback candle. As this candle pulls back about halfway or more, I like to see it pull back a lot more than halfway. That's when I place my order to sell on down close. So it places my order 1 tick below the low of this candle. Now, why do I do this? Well, when you know that when markets break support, they tend to come back and retest them, right? And what happens, how many of you actually have seen, you've been in a trade, the market breaks support, you're like, a minute, oh, this thing's going down, it's going up, whatever. And then all of a sudden, you're like, all right, it broke support, it's going. And it ends up going like this and stopping you out because you have your stop right here. All right? It ends up stopping you out. So what happens if you place your order, this candle closes up, you place your order here, sell on down close. If this candle closes up, this order goes away, cancel automatically. So we call this sidestepping losing trades. And this particular strategy has saved us tons. I mean, I would say, I can't even think of how many. But just like today, we had like 3 of them that we sidestep losing trades by waiting for that pullback candle. And yes, we do sometimes miss a winning trade because we don't get the pullback candle. But I would say the ratio to winning trades to losing trade, to missing a winning trade and sidestep a losing trade is 90-1, right? And out of 10 trades, we sidestep 90% of them. Maybe 1 or 2 kept going down. All right, let's say we didn't get this pullback candle and we just entered. Okay, the market most of the time is going to go like that. It's stop runs. It's the market maker. He's tricking you. That's his job, just to trick you. That's why we wait for the pullback candle, because when you break support or resistance and it comes down and then it goes up, who gets caught here? Not me, because I never got filled. Okay, so let's keep on going here. Okay, so here's a trade on RTY, broke the pivot, 3/4 of the candle, got the pullback, placed the order, it continued in that direction, first profit target, second profit target. Here's another one on crude oil. Here's 2 of them on the Canadian dollar. All right, I can show you trade after trade after trade, but you know, I don't want to make this webinar 2 hours long. All right, so now let's talk about one of my favorite subjects, is the money flow tracker, our auto trader, and it's called the Revolutions. So what does it do? Well, it took this trade here for 704 ticks. It took this trade here for 665 ticks. It took this trade for 1,016 ticks. Most people don't make 1,016 ticks in a month or 2 months. Took this trade for 792 ticks. So what does it do? All right, I'm going to open up the strategies window. because I can explain it better on the strategies window than I can explain it on a screenshot. So I'm going to load my template. And you get all the templates and everything. So I'm just going to use this one. So what were the rules? The rules. First rule, you have to have, who knows the first rule? Put it in the questions box. Okay, great, green background. So we want to have the bias and we might want to have the C2. So we turn it on. Now, this does not wait for pullback candle. So I have the signal delayed by 1 bar. I wanted the whole bar to clear, right? The Laguerre, we want red or green. We turn it on. The multiple time frame Laguerre, we want it to be red or green. These are all the moving averages that we use, that we have of ours. We want them to be red or green. We want the, let's see, we want the MA diff. I'll explain to you what the MA diff is. The MA diff is how far away from the 50 is price. Now, for different markets and different bar sizes, the MA diff is different, okay? The number is different. But for this particular trade, it's more of a higher time frame trade because we're trading a very large Unirenko bar. In other words, if in this screenshot here, right, we don't want to be above 350, and it's displayed on the chart like that right there. We have it now in this corner right here. So it's right there, right by the candles, and we can look right at it, right? So the next thing is the quants. We want them to be red or green. Now, the first target value is super important. Why? Our first target is 80 ticks. But in order to get filled, we have to go to 81. So in this chart, in the back, if you don't have at least 81 ticks to that pivot, it will not take the trade. It will wait until it breaks it and then take the trade. So it will not trade into support or resistance. It waits until it breaks. And of course, everything down here has to be in lined up too. So that is a very huge factor in this. We don't want it to trade into support or resistance. Now, you can have it turn on and turn off whenever you want. It has built-in money management. And we have lots of traders that subscribe to the Money Flow Tracker software and only trade the Revolution's strategy. Why?